for today's webinar, and we're diving right into it. Okay, introduction to the global financial markets. Can anybody tell me what the global financial market is? Anybody at all? Let's get to talk. Let's get to discuss. Let's get to feel ourselves in. What do you think the global financial market is? What do you think global financial market is about? Okay, anybody at all? What do you think the global financial market is? What do you think the global financial market is about? Okay, anybody at all? I just want us to keep it simple. There's no need to rack your brains over it. Just keep it simple and easy. Okay, somebody can just say it's the money market. Yes, I like that if it's the money market. You can say a lot of things, but let's keep it easy and simple. So what really is the global financial markets? In this session, you'll learn what the financial market is, the stock market, the bond market, the commodities market, and the Forex market. Okay? What is the financial markets? Truth be told, okay? Truth be told, the financial markets go by many names. Some call it the capital market, some call it Wall Street, while some just call it an exchange. Some even call it simply the markets. Some even call it simply the markets. Whatever you call them, financial markets are where traders buy and sell financial assets. This includes stocks, bonds, derivatives, foreign exchange, commodities, and most recently, cryptocurrencies. So the global financial markets, you can trade every single financial instrument once it's based on money. And these are some of the financial instruments that trade: the stocks market, the bonds market, derivatives market, foreign exchange market, commodities, and cryptocurrencies. Let's take, for instance, in a physical market, when you go to a physical market, you can purchase any single type of goods you want, as long as you're in the right market. In a physical market, we have where they sell electronics, we have where they sell foodstuffs, we have where they sell clothes, we have where they sell shoes. Basically, you can purchase any product you want, as long as you are in the right store. Okay, so global financial market is the markets. The stores are the stock market that are inside the financial market, the bonds market within the global financial market, the derivative market within the global financial market, and many more. If that explanation is clear, please drop a yes in the chat box. Okay, drop a yes in the chat box real quick. If you understand the explanation, please drop a yes in the chat box real quick. Okay, brilliant. Let's dive right ahead. Why do people trade, or why people trade basically? The major reason why people trade is for profitability and financial freedom. Okay? Profitability and financial freedom. Corporations like hedge funds trade so they can increase the profitability of the firms, while individuals like you and I, we trade to gain financial freedom and improve our lifestyle. I want to speculate on price. I want to trade so my speculations can be equivalent to profit made. That's the simple way, because every single person wants to make profit. If you are here to trade and make profit, drop a yes in the chat box. If you're here to trade to make profits, drop a yes. Make money. That's why how to trade to make money. Everybody wants to learn how to trade to make money, and that's the most important thing. Okay, that's the most important thing. How do you access the global financial markets? Okay, how do you access the global financial markets? Trading global financial markets can either be through a regulated centralized exchange or over the counter. Okay, exchange traders markets operate via a centralized exchange, such as the New York Stock Exchange, the London Stock Exchange, the Tokyo Stock Exchange, and many more around the world. When we talk about exchange traded markets, such as the stocks market, you have to go through or to access that market, you have to go to an exchange. That's why we have the Nigerian Stock Exchange, the New York Stock Exchange. For you to be able to buy a or Nigerian bills, you have to go to the Nigerian Stock Exchange to buy. Okay. Over the counter markets are majorly decentralized markets, which is made up of network of different dealers who compete to link buyers and sellers. If you go to a market, I'll use a popular market in Lagos, which is Ikeja Computer Village. When you go to Ikeja Computer Village and you step into the market, you see this guy is dragging you that link you, the buyer or the seller, to somebody who is willing to buy your product or who's willing to sell that product to you. That is a very, very good explanation of over-the-counter markets, okay? Over-the-counter markets, where different network of people are trying to link you to someone that will either pay for your product or that you will pay for that person's product. Very, very simple. Now, when it comes to OTC, okay, the financial markets can be categorized into the followings, such as the stock market, the bond market, the commodities market, and the foreign exchange market, okay? When it comes to OTC, like over-the-counter trading, being paid to one trader, being paid to another person that is going to take your order. If you click a buy order, somebody has to sell to you, being paid to somebody who has the opposite side of your trade. That's what the OTC is about. And we said we have the stocks market, the Forex market, the commodities market, the bonds market, and the Forex market in it. So the stock market is where you can buy or sell the shares of public companies. Okay? The stock market is where you can buy or sell the shares of public companies. I know you might have heard before that it's only when stocks are going up you can make money. No, when you're trading in a derivative market and OTC market, you can make money if the stock is going up or if the stock is going down. Let's say you want to trade Apple shares. The stock market is where you go to. Each share comes at a price. Okay, one share of Apple might be equivalent to $300 and something. An investor can either make money when the stocks do well, which is called buying and going long, or when they don't, which is called selling and going short. So you can either buy, go long on Apple, or short, sell, which is sell Apple. The bond market. The bond market is known as the debt market. Okay? The bond market is also known as the debt market. The bond market is a financial market dealing with the trade and issuing of debt securities. Now, let me explain the bonds market to you. Have you ever wondered where the government gets all this money to finance their projects? It's not really from the tax. It's from the bonds market. The bonds market give out money, okay, to people who need money to finance a project, and they return it later with a certain amount of interest. They give out large capitals only. That's why you see the likes of companies like Tesla, HP, and Google, they get loans, or they are granted loans in the bonds market to help them project their business better. It offers opportunities for companies and the government to secure money to finance a project or investment. Okay, in a bond market, investors buy bond from a company. That's they take a loan from a company, and the company returns the amount of bonds within an agreed period plus interest. The company returns the loan within a certain period plus interest. That's simply the bonds market. That's simply the bonds market. So I sent out a poll earlier. Please let's do well to respond to the poll. Okay. Please let's do well to respond to the poll. I sent out the poll earlier. Please let's do well to respond to the poll. And to those that said they don't have a trading account with us at Eagle Global Markets, I'll drop a link in the chat box. Please use it to open an account with us at Eagle Global Markets and start enjoying the profits from the global financial markets. It's very, very easy to use our platforms, and global financial market, very, very easy to trade and get started. Okay, so this is the link in the chat box. Sign up using the link in the chat box so you don't miss out. The commodities market. The commodities market is where traders and investors buy and sell natural resources or commodities such as corn, oil, meat, gold, and so much more. Okay, this is a specific market created for this pursuit, for this purpose, and for these resources because their prices are unpredictable. This market is used to speculate on the prices of these materials, not of these resources. This market is used to speculate on their prices so you can actually know when to buy and when not to buy because the prices are unpredictable. So you speculate on the prices of financial instruments or commodities in this region. The foreign exchange market, the best of worlds. I love the Forex market a lot, okay? The most commonly known of the markets, the foreign exchange market, Forex, is a decentralized global market where currencies are bought and sold, okay? Currencies are majorly bought and sold. Currencies like the dollar, the yen, the pounds, and the likes, they are bought and sold on the Forex market. And about 6.6 trillion is traded per day in this market. And 88% of this involves the United States dollar. Okay. Every single thing done in the global financial market, 88% of it involves the United States dollar. And it's a $6.6 trillion per day. $6.6 trillion per day. Now imagine you understand how to trade the markets properly as we're teaching you. Okay? You understand how to trade the markets effectively. You can gladly go into the market every single day and take your own scope of that $6.6 trillion daily. That's how you begin to grow wealth in the global financial markets. Conclusion: it is safe to say that the financial market is very, very, very essential to us, and it's the best and most less risky way to acquire more wealth. Firstly, because it's the largest market in the world. It's the largest market in the world. Okay, it's the largest market in the world. It has various branches. It has various branches. If you don't like to trade the forex market, you would like to trade the stocks market. If you don't like to trade the stocks market, you like to trade the equities market. If you don't like to trade the equities market, you like to trade the cryptocurrency market. If you don't like to trade the cryptocurrency market, you like to trade the bonds market. A lot of options to select from and make money from. Okay, and it is the most advantageous market with high profit potential. The global financial market is the most advantageous market with high profit potential. Trust me, I'm telling you facts. Simply truth. Okay, simply truth. If the link is to open an account with us at Indie Global Markets. Global Financial Markets is and gives a high profit rate on every single money you put into trade. Okay, great, great. That's very, very great. So this just gives you an idea into why you should get started trading global financial markets. Do we have any questions so far? Any questions so far? Any question at all? Any question at all? We're about to go to what financial instruments are. Okay, but before we hop into what financial instruments are, do we have any question at all? I just sent out a poll right now. Please let's do well to respond to the poll. Thank you very, very much. I just sent out a poll right now. Please let's do well to respond to the poll. Thank you very, very much. So are we all following? Are we all following? Before we proceed into what financial instruments are. Brilliant, brilliant. Great, we have a 5 here. 5. Okay, good. What are financial instruments? Before we hop into what are financial instruments, can anybody tell me what financial instruments are? Anybody at all? Anybody at all? Can anybody tell me what financial instruments are? Can anybody tell me what financial instruments are? Can anybody tell me what financial instruments are? They are what we use to trade in the markets. Brilliant, brilliant, brilliant. Yes, you're very correct. Financial instruments are what you trade in global financial markets. They are what you trade in the global financial markets. Okay, so we trade in the financial markets, in the global financial markets. Financial instruments are what you trade in the financial market. These assets are what traders transact based on speculation to make a lot of profits. Okay, a lot of profits. These assets are of different types and classes. They majorly are forex, indices, commodities, and stocks. Okay, so in global financial markets, you can trade forex, indices, commodities, stocks, bond, cryptocurrencies. But we are talking about the major ones, the major ones, which is forex, indices, commodities, and stocks. Okay, forex, indices, commodities, and stocks. Now, forex, foreign exchange of one currency for another. In simple terms, it is the trade the United States dollar against the euro or the Japanese yen against the GBP pounds, the sterling pounds. Okay, it is one of the most actively traded markets in the world, with an average trading volume of $6.6 trillion. Currencies are the assets that are traded in the forex market, and they are traded in pairs. Examples are AUD USD, the Australian dollar against the United States dollar; CAD JPY, the Canadian dollar against the Japanese yen; GBP NZD, Great British pounds against the New Zealand dollar. We make money by buying or selling any of these currency pairs in the financial markets. Now let's look to our right. We're going to see a table which shows the currency pair, the transactions, and the meaning. Okay, so let's take, for instance, we have AUD USD, buying as the transaction. It basically means you are buying the Australian dollar against the United States dollar. That means you are giving USD, okay? You see the D. So what it basically means is you're giving out your USD to buy AUD. That's what it basically means. CAD JPY, selling. You are selling the Canadian dollar against the Japanese yen. What it basically means is you're giving out your Canadian dollar to get Japanese yen. GBP NZD, buying. What it basically means is you're buying the sterling against the New Zealand dollar, which means you're giving out NZD to get GBP. Let's dive on to the next one. Indices. Indices are assets in the global financial markets that measures the performance of a group of stocks. The indices market is one of the best markets to trade. The price movements and volatility are impacted by economic factors, and that is one of the reasons why it is interesting to trade and profit from. So the indices market are just a measure of the performance of a group of stocks. And it is very, very easy to trade. You just need to know what these stocks are doing. Are they doing well? Buy. They are not doing well? Sell. When the business and economic climate of a country is growing and stable, these stocks will do well. So what would you be doing? You'll be looking for buying opportunities. And these assets moves up. They go down when things are not looking good. When the economic factor of the country is not looking good, these assets go down. They can be traded in the financial markets on all our platforms. Example of assets, indices you can trade on our platforms are the Nikkei, the DAX, the German 30, US 30, Wall Street and Dow Jones, US 100, NASDAQ, US 500, S&P 500, UK 100, and so many more. Okay? And a lot more you can trade on our trading platforms on global financial markets. Commodity. Commodities are another class of assets, just like indices and forex, which are currencies. They are raw materials in the form of financial instruments that can be traded in the market. These are typically stored into four categories. Example of this commodity, many more. Okay? Gold, oil, silver, coffee, and many more. These are examples of what commodities are. Stocks. Stocks, also known as equities, are one of the most well-known financial instruments. This is a group of financial instruments that are traded in the derivative financial space, financial market space, where traders can go long, which is to buy, and go short, which is to sell, based on market speculations. Examples of companies you can trade their stocks on our platforms are Apple, Google, Facebook, and many more. In the next slide, I'll show you trading terminologies you need to understand before in your next class. I'll show you how to use our trading platforms and trade these financial markets and financial instruments on them. Okay, so before we hop into the next slide, do you have any question at all? Have you got any question at all before we hop into the next slide? Any question at all? I leave a space of 3 minutes for questions. Any questions so far on what we've discussed? And also, if you've not responded to the polls, please do drop a message or please do respond to the poll. Thank you very much. Are we all following? Yes or no? Are we all following? So I'll send out the poll right now. I just published the poll. Please do respond to it. Thank you very, very much. Okay, seems we have a question. How do you short a stock? Okay, shorting a stock on our platforms is very, very easy. You see the buy and the sell button. Once you understand that a stock would sell, all you need to do is click on the sell button, input the volume of the stocks you want to share. Even without owning the stocks, you can short the stocks. Okay, input the volume and click on sell, and you basically short the stock. Okay, please, if you've not responded to the post, please do respond to it. To go a long way for me and for EGM in responding to the poll. Okay, so trading terminologies. Trading terminologies are terms that you need to know in order to improve your understanding of the financial markets. And in this webinar, we'll talk about the most important ones next. Okay, but before we hop into the trading terminologies, can anyone tell me a trading terminology they know by heart? Okay, can anyone tell me a trading terminology they know or they've heard of before? Anyone at all? Just drop any trading terminology you know in the chat box. Just drop any trading terminology you know in the chat box. Any trading terminology in the chat box. Okay. Indicators, long, MT4, short. Great, great, great. That's amazing. That's brilliant. That's amazing, brilliant. Okay. Okay, so listing out the terminologies you know, let's dive right into the one we feel are of high importance and you should know. Leverage, leverage, leverage. The textbook definition of leverage is having the ability to control a large amount of money using none or very little of your own money while borrowing the rest from your broker. Leverage is essentially a loan that is provided to an investor by a broker. A trader's forex account is established to allow trading on borrowed funds. Okay, trading on borrowed funds. That's what leverage is all about. You can borrow money to trade, but I'll show you how it's done. For example, pay good attention to this. For example, to control a 100,000 naira position, we at EG Market will set aside 1,000 naira from your capital, which means your leverage is now exposed or expressed in ratio of 100 to 1, which means for you to control 100,000 naira worth of trade position, trade value, all we are doing is you need to make a deposit of 1,000 naira. Basically, that is what it means. Pips. A pip, short for percentage in points or price interest point, represents a tiny measure of the change in a forex pair. It can be measured in terms of the quotes or terms of the underlying currency. A pip is a standardized unit and is the smallest amount by which a currency quote can change. For example, if EUR/USD moved from 0.7747 to 0.7748, it basically means that price has moved 1 pips. Okay? It basically means that price has moved 1 pip. What it basically means is that price has moved 1 pip. Spread. In forex trading, the spread is the difference between the bid, which is the selling price, and the ask, which is the buying price of the currency pair. There are always two prices given in a currency pair: the bid and the ask price. The bid price is the price at which you can sell the base currency, whereas the ask price is the price you would use to buy the base currency. Lot size. A lot is a unit measuring transaction amount. It refers to the quantity. Like I said, when you want to place a trade, you have to trade in volume. That volume is the quantity of a financial instrument you're willing to buy or sell. When you place orders on your trading platforms, orders are placed in sizes quoted in lots. Sizes quoted in lots. Bid and ask price. Bid price is the price at which users are willing to buy. Ask price is the price at which users are willing to sell. Going long and short. Going long means to buy a financial instrument, like Emeka said. Going short means to sell a financial instrument, as Ikena has said. Take profit and stop loss. A take profit is a type of market order that tells your broker to close your trade and lock in your profit when your trade hits your target. A stop loss is another important type of market order similar to the take profit order. Here you are telling us at EG Markets to close your trade when the market is moving in a direction that is unfavorable to you. Some trading tools. Now, these are indicators, as Timileyan said. Moving average. The moving average is a simple mathematical analysis tool that smooths out price data by creating a constantly updated average price. It tells you, the trader, if the average of a certain number of past price points is increasing or decreasing. Basically, it's just a line on your chart that shows you if price is going up or down. Pivot point. A pivot point is an intraday technical indicator used to identify trends and reversals on your chart. They are basically like support and resistance. So what is support and resistance? Support and resistance are used by traders to refer to price level on the chart that prevents price of an asset from getting pushed in a certain direction. Support area are areas in price where you look for buying opportunities. Resistance area are areas in price where you look for selling opportunities. Fibonacci retracement tool. Fibonacci retracements are popular tools that traders can use to draw support lines, identify resistance level, place stop loss order, and also set your target prices, which is your take profit price. Let's talk about market participants. There are quite a number of market participants left, but let's start with the most important ones. Let's start with the most important ones. Brokers or brokers are firms that gives you as a trader access to trade the global financial markets. They are the middleman between the markets and the retail traders, you and I. For example, if you want to get an apartment in Lagos, it's advisable you do it through an estate agent. The same goes for your broker. You can't gain access to trade the forex market or any market without the assistance of a broker. So you have to go to the market through a broker. Exchange. An exchange is the marketplace where securities, commodities, derivatives, and other financial instruments are traded. Regulators. These are established by governments to oversee the activities of financial markets and the firms that engage with it. So this is to actually stop any form of illicit act in the global financial market, or to curb any form of illicit act making people lose money anyhow or the global financial market. The purpose of regulation includes fraud prevention and investigation, market efficiency and transparency, fairness and honesty in trade transactions. Investor. An investor is any person or other entity, such as a firm or mutual fund, who commits capital with the expectation of receiving financial returns. Investors rely on different financial instruments to earn a return. Their financial objectives may include building retirement savings, college funds, or merely wealth accumulation over time. Banks. A bank is a financial institution licensed to receive deposits and give loans. Banks also provide financial services such as wealth management, currency exchange, and safe deposit boxes. There are several different kinds of banks, including retail banks, commercial banks, corporate banks, and investment banks. In most countries, banks are regulated by the federal government or a central bank. This brings us to the end of today's webinar. I'm your host, Akinwale Chibuike. Catch you next week, Tuesday, for another amazing